The Apartment Gurus podcast is brought to you by Greenlight Equity Group, an apartment acquisitions and holdings firm co-founded by Carl York and Tate Seymour, host of this show. We offer you the opportunity to be an owner of cash-flowing, wealth-growing apartments without the headaches of being a landlord. These assets are recession-resistant, risk-mitigated, offer significant tax advantages, and are a great alternative to the stock market. Ready to check it out? Go to www.investwithgreenlight.com today to book a personal consultation with Carl or Tate. Again, that's investwithgreenlight.com. We look forward to meeting you. Welcome to The Apartment Gurus, where twice a week, host Tate Seymour brings you deep dive interviews with the wisest gurus in the apartment investing industry. These experts are sure to create game-changing value and inspiration designed to catapult your business to the next level. Be sure to reach out to Tate at www.investwithgreenlight.com for access to his investor portal and Calendly link. And now, here is Tate Seymour and the Apartment Gurus.
Welcome, everybody, back to the Apartment Gurus podcast. And, coming back from the retreat that with a mastermind that I'm a member of called Raise Masters that I've talked about a lot on the show. Just a fantastic capital raising mastermind. We had a retreat in New Orleans, which is kind of a new, fascinating thing for me because you go to a conference in our space and there's maybe 300 to 800 people there, and you don't necessarily have connections yet with most of them or that sort of thing. With a retreat that's part of a mastermind that you're a member of, you're really nurturing existing relationships largely, and so this 3-day event in New Orleans was just tremendous. And my guest here today, Justin Moy, and I got to connect there and kind of share value and stories and whatnot. Justin, you were signed up to do this with me, I think, long before the retreat, actually, weren't you?
Yeah. I think, as you know, our schedules change a lot and they get dynamic, and now we're like, shoot, we finally get some time. And then the travel was part of it, right? You got to block out probably a week to travel, get there, do the thing, and then come back and get caught up. So yeah, but excited to be on the calendar, and we finally got to do this. Yeah,
really glad to have you. And I got crazy, dude. I didn't go home after New Orleans. I went to Columbus, Ohio, where we own 5 properties, and we have 2 under contract, and spent 3 days touring and meeting with property managers and our partners there and brokers, and it just kind of on and on and on. Little side conversation that we won't go too deep into, but when you're in this space doing deals and you are market specific, which I think is a good thing to be, especially as a lead sponsor, visiting your market, putting your boots on the ground, shaking hands, going to dinner, going to lunch, sitting down in your partner's boardroom for 3 hours. All that stuff is like gold, and it's so rare that I'll do a market visit and not come back with either a new deal or a new investor, a new partner, a new broker relationship. They're kind of game changing almost every single time. Yeah. So, we're in Oklahoma City and Columbus, as many of you know, and we try to get to those markets as often as we can. We have projects ongoing in both of them. So just to kind of highlight not only the benefits, but also like it's really fun. Like for me, like I just have a blast when we go to Columbus or Oklahoma City, especially Columbus. We just love being there, and there's just nothing like being there in person in your market and learning and everything else. So, So, but Justin and I, like I said, we're connected through this mastermind, and got to kind of connect in person here this last week, and really excited for you guys to get to know Justin a little bit here on the show. And he's got a lot of valuable experience and perspective to offer on things. So Justin, super glad to have you, man. Welcome.
Hey man, I'm excited to be. You got that beautiful background on your Zoom there. I think you're in Utah, correct?
Yeah, Salt Lake City. My partner and I are based. The Greenlight Equity Group is my partner, Carl York, and me, and we're based here in Utah. But we don't buy in Utah. We buy for both cash flow and appreciation, and you just can't do that in Utah, or you can't do cash flow in Utah right now. You can do appreciation all day long, but you can't make the numbers work without bringing in all kinds of cash and doing a low leverage scenario. So,
yeah. I mean, that's a majority of the country, right? Like statistically speaking, most people live in, New York or LA or San Francisco, which are notorious markets like that. So I think that's a pretty common path that people are in. And one common reason why people come to guys like us, right? Because they live in those markets. They want to get into real estate. They know, hey, I should probably look more towards the middle of that country, middle of the country here. OKC, I love OKC. We looked at a handful of deals there. I've been there a handful of times myself. But I think that's a majority of people, right? They live in those highly condensed, highly appreciating areas. Yeah. They know they should get into real estate. They know this is a great asset class. They crunch some numbers in their local markets, and they go, what the hell? How are people making this work? And then they find guys like us who do this in kind of the middle of the country. So love that value that you provide to people, because if you want that, and you're in Utah, you probably have to partner with somebody like yourself to go out there and go do deals in Ohio and Oklahoma and Kansas and then Missouri and all those places.
Yeah, really, really well said. And, with interest rates doubling in such a short period of time and insurance rates going up and everything else, like it's making those hot markets even harder to pencil by a lot. And, so like you mentioned the LAs and New Yorks of the world, but it's the Austins and the Dallases and Phoenixes and of the world as well. And those are tremendous growth markets. And, our colleagues, just the people that Justin and I, network with and are in this mastermind with, a lot of them are in those markets and are, doing really well and know how to make the play in those markets. But we look for affordability and we really look for that hybrid concept, right? A market that's affordable but also growing and has a significant growth factor, both currently and also looking forward. So, Jade, share with us a little, if you would, of kind of your background and what kind of how you got to where you are today, especially in the real estate space, and then can't wait to talk about like everything you're up to today.
Yeah. So, I guess starting from where I'm at now and then backing up, right now, my business is the syndication business, just like yours, where our niche is really twofold. First is who we work with. So we work with predominantly top producing sales professionals. And that's because I'll get into my history here in a minute, but that's what I was. And there's unique pain points there when it comes to investing that I experienced and I wanted to solve. And the second piece of that is top producing sales professionals who are investing with the goal of replacing their income with completely passive income as fast as they can. Typically within 10 years is actually what we found, which is pretty realistic with this strategy. Yeah. So, I got into real estate. I tell people it was kind of lucky of me because my very first office job was in a commercial real estate office. I was an intern. I was at 17 or 18 or whatever it was. And when you're at that age, you're looking for what you're going to do. Right. I actually decided I wasn't going to go to college, at least not right away. I ended up going later in life, but decided I didn't want to go to college. I want to take some time and work a few jobs and kind of find myself there. And working in that commercial real estate office, it just stuck with me. I love the environment. I love, I would help process commission checks. And like, that's really exciting, right? As a 19-year-old kid, seeing these big commercial real estate deal checks getting written out and just the environment of the office was so great. They were in the office, they were in the field. They kind of had this exciting, no day was the same. And I really, really liked that. Yeah. So I didn't jump into commercial real estate, but I did get my real estate license and started selling homes. And this was in the Bay Area of California. This was the fourth most competitive market for residential real estate at the time. And I think it's still up there. Yeah. And I was it was that typical, I went to the office as a residential real estate broker, and there was a stack of business cards and a telephone on my desk. And they said, get to work. Go get some listings.
What year was this, Justin, roughly?
This was maybe 14 years ago. Got it. Yeah. And so, I really fell flat on my face for 6 months straight. I don't know many people know this, but in the real estate game as a broker, you don't have a salary. It's 100% commission based. Yeah. So luckily I was 18. I was living with my parents. I wasn't going to get booted out if I didn't have any income, but it's still heartbreaking to go through something and to cold call every single day, all freaking day, and have nothing to show for it.
Yeah.
And I always tell these people this story that it was almost 6 months to the date. And I remember it was 7 o'clock in the office, and I took my headset off and I was cold calling all day. And I just said, what am I doing here? This is such a waste of time. I have nothing to show for the past few months. Everybody around me is closing big deals and they're doing really well. And I'm just not. So I said, today's the day I'm going to pack it up and I'm going to get out of here, and they'll just never see me again. And right at that moment, one more, what we call for sale by owners, right? A FSBO listing came up, and it popped up on Craigslist, I think. And I looked at that listing, and probably just for, a minute or 2 minutes, just thinking, forget it. I'll just make one more call and I'll never do this again. I'll never have to make another cold call. This sales thing is a sham and it was a lie, whatever. I'll just get this one last done. And I called, and that was the very first person to ever say yes to me to an appointment. Wow. And so much so that I almost didn't know what to do. Yeah, I didn't even know what to do. Yeah. I thought it was a joke, actually. And you're in such disbelief. And I said, sure, I'll come by tomorrow. Me and my mentor at the time, we went there tomorrow and we listed her home. I think it was like a $1.2 million home. She bought her next home with us, which was about a $3 million home, closed on the same day, ended up being like a $60,000 net commission check to me. Mm-hmm. And so I was over the moon as an 18, 19-year-old kid would be, getting 60 grand all up front. And this was, like I said, 12, 13 years ago when 60 grand had a lot of weight to it. And ever since then, I loved sales and I loved the game. So, I'll take a temporary pause there because there's so much, so much. Yeah,
it's a great story. And it's kind of, it's just almost surreal in a way that, the last call that you were going to ever make in that career, like, almost set you free in that career, and at the very least, like, helped you establish the value of sales and salespeople and what's
and it set the trajectory of my life, not just for the money that I would make, but also for the mentality that you build. Because every time I hit a wall from then on, I remembered that day. Mm-hmm. And I hit a wall and I thought, I can't get over this one. And I just did one more thing. And that was my big break. That was my big thing. So I don't think it could have come at a better time. Looking back, right? It sucked to eat that a 6-month time period when you're going through it. But, it's such a great lesson that I've taken throughout pretty much every challenge that I face, and whether it's a sales or investing career, that it's just, hey, once you're at that breaking point, you're right there. Yeah. So go do one more thing, one more email, one more call, one more, whatever it is you're doing. That's going to be when you get rewarded.
Yeah. It reminds me, Ed Mylett, I think he published it this year, a book called The Power of One More.
Mm-hmm. Yeah.
It's all about, one more rep in the gym, one more phone call, whatever it is you're up to, like the access that you get in just one more of whatever you're up to, like, it can be an absolute game changer.
Yeah.
And
I lived it.
Your story is a great example of that.
Yeah. And I lived it. Although, and I could totally see how if you've never done something like that, you kind of roll your eyes like, yeah, whatever. It's, it's not, it kind of sounds like a freaking Cinderella story, and I'd say the same thing if I didn't go through it, but it's really helped a ton. And so when you are doing anything that's worth having, it's going to be hard and it's going to be a grind, and you're going to be doing the same things over and over and over again. That's just what it takes. Mm-hmm. But if you're able to get married to that process and just enjoy the journey, that outcome is going to materialize eventually. And so just keep playing that game.
I love that. It's like wax on, wax off, right? And and you alluded not being attached to the outcome. Mm-hmm. Like, fall in love with the process and the waxing on, wax on, wax off, and don't be attached to the outcome. And chances are the outcome's going to either be there or even knock your socks off in a way that you didn't even anticipate. Like yours. I mean, that FSBO with the initial commission and then the second commission, and I mean, that's a home run right there in the realtor space for sure.
100%.
I was a realtor for I don't know, 15 years or something. And
yeah,
I said,
you know it.
The game. I know the
Yeah, you know the game, you know the grind, and it just really is what it takes. Just that one more time you have to push through, and that's when you're going to get your break.
For sure. So take us from that, from that place of like, kind of discovering the magic in sales, if you will, to kind of today, like specifically, when did real estate hit your radar? Obviously you were in residential real estate, but you had worked in a commercial real estate office as an intern. So it's already on your radar, but how did that transition go?
Yeah. So I actually really had no initial interest in commercial real estate. It sounded to me, at least relative to residential real estate, extremely difficult to break into, which it is true in my opinion. But it just didn't really interest me. And when you're a broker and you're in the Bay Area and the average home is whatever, $2 million anyways, you don't really need to sell these massive complexes to make great money. So it kind of fell off my radar for a little bit. What really brought real estate, specifically commercial real estate, back on is my deep dive into investing. Mm-hmm. So when I was, again, I'm 18, 19 years old, I'm making great money. I mean, unheard of money. And my parents, they did well. My father was an entrepreneur. My mother worked at nonprofits. So she didn't ever really have that very high salary. I was making so much money relative to her that I didn't know what to do with it. I knew you should invest. I knew that you got to be smart with your money. And one thing my mom was always very good at was money education and money management. So she said, well, you got to invest. So start looking at investing strategies. And I would look at these strategies. Okay, I can open up a retirement account, or okay, I can put it in the stock market, or I can do these IRAs with Roth versus traditional, what's the way to do it? And every single thing that I looked at screamed one thing to me. And that would be, you have to do this for, 20, 30, 40 years if you want this to pay off. Mm-hmm. And I thought to myself, well, that's kind of the game. That's what everybody says. It's just time in market, right? Those things make sense. But one day I was working very hard. And I don't know, maybe it was a panic attack. Maybe it was a stress-induced breakdown. Something happened to me. Yeah. Where I just broke down and said, I can't do this anymore. I was working extremely hard. I was sacrificing my personal relationships and my health. I was always on, and I never stopped. Mm-hmm. And I said, okay, I need to start investing with the thought that I cannot do this for 40 more years. But I still want to live this lifestyle. I still want to have financial abundance. Right. So how can I make that happen? That was the question for me. How can I take my high income right now and buy my future right now? Because right now I'm willing to do whatever it takes, but I can't say in 10, 20, 30 years, who knows what happens in life, whether it's health or family or whatever, where you don't want to do that anymore. Mm-hmm. So I dove down that path. And that's really when commercial real estate just was screaming off the page at me as something that you can do that with very realistically. So that's when I created, President's Club of Investors, which helps essentially people who were me, top producing sales reps who think to themselves, I'm going to get burnt out living this lifestyle. How do I buy my future with the money that I'm earning right now and do it fast?
Right. Yeah. And a lot of kind of higher level influencers that I know, and teachers that are into personal development stuff, they're all about asking the right questions, right? Like, because the right questions will lead you to where you need to get in a lot of places. And that question, of catching the vision for, number one, I don't want to do what I'm doing for 30, 40 years here. And then catching the vision for, let's figure out a way to sustain this lifestyle, sustain the income and wealth creation in a way that shortens that timeline way down. Right. And then, and so you solved that pretty big problem for yourself, and then took it out to, other people in very similar lifestyles and walks of life as you, and build a community, and it sounds like you kind of took it from there, huh?
Yeah, I think I heard this phrase one time. I don't remember where it was from, but it essentially said that you are best equipped to help the person that you used to be.
Yeah, I love it.
So a lot of people, when they get into this space, the first thing they do is they say, well, I want to get a bunch of investors. Okay, who makes a lot of money? Doctors make a lot of money, and surgeons make a lot of money, and chiropractors and dentists and lawyers. Right. And that's true. And if that's your strategy, that's not a bad strategy to help those people out. But are you best equipped to serve that person? Have you lived that life? Have you really intimately, truly understand the pain they went through? Now, almost anybody who's been in sales, and this is kind of pulling the skirt up a little bit, has had kind of that mental breakdown at some point where they've just put their face in their hand and they say, I can't do this. And some people, maybe it's only happened once in their career. Some people, maybe it's like a weekly, monthly, daily occurrence for them, but they kind of keep at that grind. And it's so hard to capture just the visceral feeling of that if you were not in that profession. Yeah. So I love that saying, you're best equipped to help the person you used to be in any walks of life. For me, it happens to be helping salespeople invest. For you or for the listeners, it could just be something else. Maybe it's not even centered around money or investing. Maybe it's around health or wellness or well-being or sleep. Like, it could be anything. Yeah. But just look for, like, who were you 5-10 years ago, and who would you love to become, and how could you help that person? Because there's somebody living that life right now who your help could change the trajectory of their life. Yeah. So that really is my goal.
Yeah, love it. 100%. There's a YouTube influencer that I love. His name is Dan Koe, Koe, younger guy. And, this is his formula, right? Like, figure out what problem in your life you want to solve, or your business or whatever, solve it, like, write down the solution, and essentially create a curriculum, if you will, around what you've created, what you've done there, and then package that up and sell it, whatever, however you want to distribute it, right? And build your value there, and it makes so much sense if you think about it, because when you, like you said, Justin, when you've walked in those shoes, you have a perspective that you otherwise wouldn't have, that gives you the ability to relate at a much deeper level to your avatar, your prospect, right?
Yeah. And I think it's so important because there's a few layers, and what happens is you want to adjust your strategy to adapt to those layers. So some people ask me, well, okay, it's great that you help salespeople, but is there really a difference? And I say yes, because in my opinion, if you're in sales, your income is more volatile than the average profession. Your income is more susceptible to recessions than the average profession. And you have a very specific goal. If it's to replace your income with passive income, all those steps should be accounted for in a very specific type of deal or type of investing strategy, right? So we invest in similar assets, but we look for a certain blend of cash flow and appreciation, a certain blend of an asset class that's in a market that's recession resilient. Because if your income goes down, I don't want your investments to go down with them, which is what your stock market's going to do if you're in sales. I want those to at least prop up or counterbalance each other. And then really helping you with that specific goal. There's some investment groups out there that they do what me and you do, Tate, on the surface level, but they're going to buy that Class A trophy asset that they want their kids to inherit. So that's a different goal. That's generational wealth. Right. And if that's what you want, I may not be the best one for you. I probably won't have the type of deal flow that you're looking for. But if your goal is to replace your income with passive income as fast as you can, typically within that 10-year period, I am looking for those types of deals that help you along that journey. So it's very specific in that our firm has very specific goals for people. And if you fit those goals, we should definitely get in touch. If you don't, I don't know if I'll be the right person for you. Maybe you or your group is better for those goals. I don't know what they are. But if you're very, very specific, you can really, really help somebody as much as humanly possible, as opposed to being like a general real estate investor.
Yeah. The riches are in the niches, right? Yeah. 100%. All right, so let's talk about that. For you to align well with someone, that you're a prospect, somebody you're going to bring in as a potential partner, that sort of thing. What are the goals that you're looking for that are the pain points, et cetera, that something like that would have?
From an investor or like an operating partner?
An investor, yeah.
An investor, yeah. So I always look for, and the thing is, if you're not in sales, I have a few investors who are not in sales. It's not like I won't help you or I shun you if you're not, but I don't know if our stories will be the same. So when people come to me, a lot of times they have that similar goal. They have that similar journey. A lot of times when I'm talking on a podcast, I'll see people book a time on my calendar, and when we talk, they'll say, dude, like that is me right now. I'm making a ton of money and I don't know what to do anymore. I don't want to do this for 30, 40 years. I'm looking for something like that can buy my time back. Mm-hmm. So when I educate investors or prospective investors, it's about how to accomplish that journey. And so Tay, you probably know this, but if you want to replace your income with passive income, it's very hard to do that on single family homes for cash flow. Right. A lot of times, unless you're buying like in the hood, you might make $100, $200. I have a really good friend. He's I won't say his name, but he's a guru in the single family investing space. His benchmark is to net $200 per month per rental. Mm-hmm. Okay, it's going to take a lot of rentals and a big team to do that in a timely manner.
Sure.
So we have this arc of an investing strategy where until you have a certain level of income where where you can buy a big enough deal that 5, 6, 7% cash flow really means something to you, you're in this equity growth phase.
Yeah.
And when you're in that equity growth phase, you can start out with 50 grand, 100 grand. If you take 100 grand and put it in a cash flowing deal, that gives you 9% per year. Okay, you'll get 9 grand in a year. It's not nothing, but you're not quitting your job, right? So, but if you put that in a deal that's going to give you double that money in 5 years, and then you do that again, then you do that again. Okay, now in the next couple of years, you have a pretty big pot of equity that you can put into that high cash flow deal. And then you can walk away from your job, and that money is very meaningful. So we have this arc that we walk our investors through, find out where they are in that arc and cater deals specifically to that to get them there as fast as we can.
Mm-hmm. Love it. Awesome. So specifically, like, talk a little bit about, your company, your team, not just personnel, but, your objectives, goals, kind of core values. Love to hear about all that.
Yeah. So, it's interesting because I've been in the syndication space now it's been about 5 years, but I wasn't always President's Club investors. Mm-hmm. So we work with a lot of investors in different walks of life. And it's actually how I found this niche is because I realized by doing my best to serve everybody, I was not serving one singular person to the best of my abilities. Mm-hmm. So President's Club investors and our investing strategy and our niche now is fairly new. Right now, it's just me on the team. I left a team of about 4 partners and 4 full-time employees because I just felt like the visions didn't align, which is totally, and love them still. Still keep in touch, still great friends, still in deals together. Nothing bad on them at all. It's just a different vision, and that's totally fine. So I'm rebuilding what I do here. And because of that, we don't run deals. We don't operate deals. We partner with institutional size investors to run and operate deals. And I focus exclusively on helping our investors find those deals and get into those deals.
Correct.
So that's what the team looks like now. As far as core values, it's interesting because I've been giving these a lot of thought. And one word really comes to mind as I put together kind of the pillars of what we stand for. And that word is relentless. So to me, I'm a huge fan of relentlessly pursuing the things that you feel you deserve and the things that you want, whether it's money, it's love, it's a thing, whatever that is, and be shameless about it. If it's money, if you're in this money growth phase of your life, it's not trashy to talk about money. It's not, you shouldn't be looked down on for prioritizing money at certain phases of your life, but pursue that goal with relentless effort. Mm-hmm. And so I'm kind of building up some more, but I know being relentless is going to be part of the core values that we bring on and who we hire and who we work with and invest with.
Yeah. And relentlessness, it's like, if you never quit, you can't fail, right?
Yeah. Or what did Kobe Bryant said, I've never lost a game. I've just ran out of time. He's just relentless with it. I mean, you can't, some of these guys, you can't beat. Look at whether you love them or hate them, like the Grant Cardones of the world. I mean, that guy is a starving dog on the back of a meat truck. That's what he always says. Right. I will not stop until I get what I want because I'm going to pursue this like my life depends on it.
Yeah.
And if you go out with that mentality, it's very, very, very hard to fail.
Grant Cardone's a perfect example of relentlessness. No matter how he resonates or doesn't resonate with you, you can't argue with this guy is just absolutely relentless and just does not quit ever. And he's run into a lot of stuff and has never quit. So that's a good one. Talk a little bit about your strategic partners and what you look for there, and then we'll talk a little bit about deal criteria too.
Yeah. So the partnership and you hear that a lot. Bet on the jockey, or the sponsors are more important than the deal in the market, stuff like that. And I totally agree. One thing that's unique about us and me specifically is I spent the first 2 years of my syndication journey underwriting 3 to 5 deals every single day, no matter what. Even if there were deals we knew we would never pursue, and I would just go on LoopNet, sort by new, and just start doing it, because I feel like that was a really good way to learn. And because of that, I have a more unique eye for underwriting and due diligence and understanding how to manage assets. We have just under 200 units now that we still manage and run. Those have come with challenges, just like everybody's experiencing right now, but they're challenges that I would never understand if I just raised capital. If I just did that. And when I look at due diligence on the team, I'm looking for partnership risk. That's a big one. I want to know how long you and your partners have been together. If it's a brand new partnership, that may not be a big deal, but partners combine and split all the time. And if it's a brand new partnership, that just proposes a certain level of risk to it. I want to know how big is the team. To me, what I say is I don't want to invest in an individual. I want to invest in a company. So a lot of people, there's pros and cons to investing with, let's call it I don't want to say mom and pop, but maybe a spouse duo or, one syndicator. Right. Yeah. And, some people might like that personal touch, but to me, I'm willing to sacrifice a little of that personal touch for formal systems and operations. And I don't want, if you get hit by a bus, Tate, I don't want the investment to go with you, because life happens and people get sick and people pass away and people have family emergencies, and a company is going to be more suited to withstand those things than an individual or boutique, like you said. So size matters in this sport, in my opinion. A certain amount of capital ability. It's tough to argue that a group with more money cannot withstand longer and harsher storms. We're doing it now. I'm personally putting in money into deals right now that are not hitting projections. I know when we talk in New Orleans, a lot of people are doing the same. I want a group that's in a position to be able to do that, because those big groups who care more about their reputation than one individual deal, they will spend a lot of money to make sure that everything goes as well as it possibly can, even if they're going to take a haircut, because again, they have brand equity that maybe that boutique person either cannot or will not put up. So those are some of the things for sponsors, and I'll kind of pause there because I know you have some similar criteria, and we talked about this stuff in New Orleans a lot. But that's on a high level, some of the immediate things that I'm going to look for in a partnership.
And that's tremendous information for us lead sponsors that are out sourcing deals and sourcing capital partners and quote unquote co-GP or fund of funds, all that stuff. We got to know, as we grow and expand and get closer and closer to our goals, it's super important to know what's important to potential strategic partners about us and how we can best, fulfill those requirements and become the type of sponsorship team that people seek out. Right. And any business has a trajectory, right? And every business at some point is brand new and every business grows and whatnot. We're Carl and I've been doing real estate since 2011 together, but in the multifamily space, we're about 4.5 years into it. Right. And so, we're building our team. We're, building our vivid vision. We have a very clear picture where we want to go and what we want to be doing over the next 3 years. And, those things like the capitalization, the systems and processes, the team that you have around you, now, you mentioned stability in the company. That's huge too. have you guys weathered some storms together? And if so, like, how did it go? Right? Like, how did you guys handle things between the partners in your group? Like when the stuff really hit the fan, like that's when things can really fall apart interpersonally and in a team. And I can honestly say Carl and I have been through some pretty hard stuff. Like, two deals in particular that were losses for us that, I don't mind telling people about because we learned from them and they were very painful, and we'll never make some of those same mistakes again, or any of them for that matter. And, so hopefully for listeners, whether you're looking at, whether you are a lead sponsor or looking at sourcing deals and putting deals together as a lead sponsor, or you're considering niching into sourcing and raising capital and bringing them to other lead sponsors, Justin's description of what you should be looking for is tremendous to keep front and center as you guys grow your businesses and move forward.
Yeah. And I like what you guys have, because to me, you said you and your partner have been doing multifamily for, 4 years, 5 years, or whatever it is. Yeah. That to me is totally fine, because I don't need you to have, 100 years among you guys of experience. That has its certain value. But one thing too is being well connected. Yeah. And even just through the groups that we're in, I have called people from those groups, and there's cumulatively hundreds of years of experience there, or just drop something in the chat, say, hey guys, I'm going through this issue with this property. What would you do? Right. Is the group that you're investing with connected like that, where they can talk to people, they can pull in different people, they have the who, not how ability. Right. Can they dig into the Rolodex and solve big problems or problems that they don't know how to deal with? So to me, I don't need you to have 20, 30 years in this field, but I want you to have access to those types of people. So that's huge too. And then also shows that you're prioritizing your learning and your growth and your education, which is, top of the list for anybody in any field. Yeah.
Yeah. The word that kept coming to mind when you were just sharing that was resourcefulness, right? Like, you as an entrepreneur in general, like from day one, in my opinion, that's got to be a key component of you and who you are. And not only do you need to have resourcefulness, but you need to know you have resourcefulness and have confidence in that, because otherwise you're not going to do deals. You're not going to take risks. You're not, you know what I mean? And then the network is your net worth thing. And that's part of resourcefulness, right? Like if you're very well networked with a lot of powerhouses in the space, which, our group is a tremendous example of that. 130 plus people. We're all on a Slack channel. Like Justin said, we can get on there and post a problem, a need, a whatever, something we have to offer, whatever. And we have 430 high level entrepreneurs that are mostly raising capital or in the most of the time in the real estate space, right? We have access to those resources. So huge points there.
Yep, absolutely. So, and I agree, because like I said, it's the who, not how of it. And I love what you said, resourcefulness. That's a great way to put it. And if you're not resourceful, you probably won't make it, right? Because a lot of these things, nothing goes completely as planned, no matter what. You can get the biggest, largest private equity group to do due diligence and underwrite and give projections, and no deal ever finishes at projections, either overperforms or underperforms, right? So if you don't have that resourcefulness or that connections or those ability to move laterally and foresee and then overcome issues as they come up, that you just never heard of, right? We have one deal, and there's no way we could have underwritten this or known this, but there was a local homeless encampment that was a little bit, a couple of blocks away from the deal that we purchased. Never bothered anybody. Then all of a sudden the city shut that encampment down. And what happens when hundreds of homeless in the area start roaming around? They go to your property and they vandalize it. And they break in doors and they break windows and they break glass, right? And so one night I woke up and I had like 17 missed calls in the middle of the night, right? Never good news. And somebody bunch of residents and the magical, hey, by the way, we had, all this tear through the property overnight. What do we do? Can't plan for it. no matter what, can't plan for it. But being resourceful, being able to reach out to others, say, hey guys, how can we fix this problem fast? Because we don't want our property to get this reputation, and putting that plan together. That was not an issue that I had ever dealt with, but it's an issue that somebody I knew has dealt with, and they gave us good plans, and we were able to address that.
Yeah. We've dealt with a homeless issue at one of our Oklahoma City properties, and it's tough. And it's once that's a component of the property on any kind of like semi-permanent level or as a pattern, right? It stigmatizes the property and makes it really tough to turn it around.
Yeah.
So nipping it in the bud the way that you did is huge, for sure. So on the property level thing, are you talk a little bit about what you look for there? Yeah, obviously you like just about every other entrepreneur that's doing what you're doing and assembling capital and bringing it to deals with key partners that you're working with. Yeah. You're most concerned. Number one priority is the team and the qualities that we just went through and making sure that they're there. So talk a little bit about, past that point, what you're looking for in an individual opportunity, and how that works for you.
Yeah. So I think one big thing that a lot of people are starting now to realize and I could go over a lot of things that I'm sure a lot of people have heard, in very high level due diligence things. But one thing I think a lot of people are missing is income and income growth in that area. That's something that we're seeing a lot of these hot markets starting to get out of whack, because we've had, the Phoenix, that Class C renter, unbeknownst to a lot of investors, had that rent to income ratio pushed up to, 40, 45, 50%.
Right.
And now we're starting to feel the effects of what happens when you do that to people. You just can't do that. So one of the biggest things I'm always looking at, almost the first thing is, we'll always go through the debt, right? Your debt's going to be the number one killer of commercial real estate deals. And then the second thing is, are your growth projections sustainable based on what the market can pay you? Doesn't matter how great your product is. If the jobs aren't there, if the job growth isn't there, if the diversity of economies isn't there, you won't even have a tenant base to rent from you, no matter what. Doesn't matter how good the value is in the property. Right. So you need to look at, will the market support the business plan that you're looking to do? And this is multifamily predominantly, right? Where you're catering to a consumer, a tenant. Yeah. Will that market support your business plan? Or are you maybe overdeveloping for that area? Are you over renovating for that area? If you're a very expensive apartment, like what is the delta between home ownership in that neighborhood and renting in that neighborhood? About 73% of renters are actually renting because they have access to a neighborhood that they cannot afford to buy in. Yeah. So what happens if now you want to push rent so high that's like, forget it. If I want to pay this, I can just buy something. So I think that's a big thing, the income growth and the rent to income ratios that a lot of people kind of let slip over these past few years and haven't realized those numbers have really crept up on us and are paying the price because they realize the market cannot go more. They actually need to come down a lot to make it healthy for them. And, we're feeling the effects of that. So I'm shooting right to the debt of the deal, making sure that we have some good terms there that we're comfortable with. And then what is the market looking for in this area? What can they afford to pay? And how can we meet them where they're willing to pay a premium and able to pay that?
Do you have any favorite markets that are, they're like top of your list that kind of check all those boxes?
Yeah, Kansas City. Yeah, I love Kansas City.
We did.
We talked about it in New Orleans a little bit. I actually love Oklahoma City as well. And if you look at Kansas City and Oklahoma City, had the two cities with the biggest rent growth in the past year, 14% in both. So I think. And Kansas City is just a little bit bigger than Oklahoma City. Oklahoma City is, of course, developing at a faster rate because it's smaller. But if you look at the income growth, the job growth, and these markets are hyper local, right? So we're kind of talking in bigger city senses, but income growth, the job diversity coming here to Kansas City, the feeder cities, people are coming down from Chicago and Minnesota, whether it's for politics or less harsh weather or just like it's just getting too expensive there. They're feeding somewhere, and we're finding Columbus, like you, Oklahoma City, even Tulsa is staggering a lot of people now with they actually pay you to be a digital nomad there. I think it's like 20 grand and or something like that. I forget what it is.
Yeah, really cool. We love Tulsa too. Yeah.
Yeah. I think a lot of these markets that a lot of people are not looking at And because of that, just like you said in the beginning, you have opportunity for great and strong appreciation, but cash flow. Cash flow is a defensive metric. Again, you're probably not going to get rich off of 5, 6, 7% cash flows. But when it hits the fan, you want to have that cash flow cushion so you can dig into that if you need to.
Yeah.
So you're able to find these types of deals still in some of these markets that me and you were both in. Yeah. And I love the Kansas City market.
Yeah. Yeah. I think it's a great market too. Am I remembering right that when you and I talked last week, did you move to Kansas City?
Yeah, I moved here in December. That's right. That's how much I love the market, right? We have some assets in the Midwest, so that was part of it. But I think there's going to be huge opportunities here the next 10 years. And that's kind of the vision we're looking at. And we're actually have our first Kansas City deal coming out with the partnership here, probably by the time this releases, maybe right when it releases. Nice. So that'll be coming up too. And we're over the moon and excited for that. We love this market. We love breaking into the city here.
Yeah. It's awesome. Great stuff. Talk a little bit about your, kind of what you have to offer investors online. We were talking a little bit before that we started recording your Retire Within 10 bundle. I'd love to hear all about that.
Yeah. So, if throughout this episode, this really resonated with you and your goals, I definitely want to get to know you a little bit better, but one thing that could help you out is our Retire Within 10 bundle. So if you head to retirewithin10bundle.com, it's 10 with the 10. I'm going to give you a few things. So first is our Retire Within 10 calculator. So if you want to find out how fast you can replace your income with passive income, few basic inputs you're going to put in there. And then it's going to show you the cells will light up green at the year that you're able to replace your income with passive income to really give you that roadmap. I think a lot of people lack that roadmap, and this is going to help you put that together. The second is an ebook. It's called The Top Secret Investing Strategy for Sales Professionals. If you're in that sales role, there's some pain points that you want to know that we didn't dive into in this episode that are super helpful for you when it comes to creating that investing journey. And then the third, I always call it a secret gift. It's going to help you reduce investing risk later down the road if this is something you choose to do, and it will save you dozens of hours in the future once you start investing in a lot of deals. Just trust me, you absolutely want this as soon as possible. So retirewithin10bundle.com, 1010, and then get all that stuff totally free, first name, email, that's all it takes.
Yeah, that's awesome. Yeah, got a chance to check out the site myself, and it's awesome. It's an awesome site you've built, and the assets that people have access to are amazing. So, and I would say if you're not in sales, download this stuff, right? Like you can't get too much great info and expertise in this space. And, my guys in my mastermind and my coaching clients, I have them go to every single syndicator they can find online, get on their mailing list, download their ClickMagnet, their assets, their value add assets, learn what they're doing. And Corey Peterson, one of my original mentors in this space, he wrote a book called Copy Your Way to Success, and Shoulders of Giants, right? Like, there is no need in this space to be reinventing the wheel. And, I've had, basically one client, let's say, that kind of insisted on doing things that way. And it's just, not only is there not a need, but when you're dealing with this level of business and the value of these assets and the investments and that people are making with their life savings, you've got to do it right. And you got to do everything that you can to make sure that you're doing it right. And the tried and true methods and that you can learn from mentors, coaches, masterminds, Justin's download, Justin's website, et cetera. Those are the things that you need to have in your space to mitigate risk, make sure you're doing the best deals you can for your investors and your residents for that matter. And that's the recipe for crushing it ultimately.
Yep. Yeah, I agree. So keep learning, dive in. And again, we work with people who are not salespeople as well, but I just, that's kind of who our bulk of our people are, but you can't learn you can't learn too much. So check it out. I'm sure you'll put a link in the show notes. You're an awesome podcast host, so you do all that stuff. But yeah, this has been really good. And again, if you go to that website, you'll have plenty of opportunities to book calls with me, call me, text me, whatever. I geek out on this stuff. That's why guys like us create podcasts, so we can start talking about real estate more than our friends and family want to do it.
Yeah, for sure. And also find Justin on Instagram. I'm assuming, are you on LinkedIn and Facebook as well? I know you're on Instagram.
Yeah. If you check that out, the President's Club Investor is kind of my little tagline. If you type it in any of those, you'll find me.
Yeah, perfect. So Justin Moy, everybody, MOY, has been our esteemed guest today. Love this, Justin. This was an awesome episode. Thank you so much for everything you brought and everything that you shared with us. It was tremendous.
Love it, Tay, man. Thanks so much for having me on.
Yeah, you betcha. Listeners, thank you. Really appreciate you guys. As always, love hearing from you. Every guest that I have is here for you guys as well. They love hearing from you. Use us as resources. I'll jump on a 10, 20, 30-minute call with any of you guys, anytime, time willing. And, we can talk about whatever you want. And our goal, Justin's, my goal, a lot of my other guests' goal here is to simply add value. And it's selfish because we know that comes back. So, but we really want to be a contribution and help you guys out. So Justin, thank you. Listeners, thank you. Love you guys. We'll see you on the next episode. Take care, everybody.
This has been the Apartment Gurus with Tate Seamer. If you enjoyed this episode, be sure to subscribe and leave a rating and review on your favorite podcast platform. To contact Tate, go to www.investwithgreenlight.com for access to his investor portal and Calendly link. He loves to hear from you and thanks you for being a valued listener. Just a reminder that you are the guru. See you on the next episode of the Apartment Gurus.